Good evening, everyone. So today we'll be doing another past question, and then this would be our last past question. So the rest I'll leave it for you guys to go and look through it. So I just want to get all the past questions out of the way. Okay, so let's see what we have. Let's see what we have for today. So if someone can read and then we discuss, we go through. Yeah, if someone can read, then we begin.
Okay, question 1A. You are an audit manager with AA and Co Chartered Accountants and Business Consultants. You have been assigned to the audit of Western Decors Limited, WD, a long-established firm of event planning services in the city where your practice is located. The audit of the financial statement for the year ended 31st March 2019 is due to commence shortly. The audit firm is aware that the client has received a loan from the bank in April 2018 and that the bank will rely on the audited financial statement as part of the terms and conditions in the loan agreement. The partner in charge of AA and Co has just visited the client and made the following notes during his trip. Point 1. The firm has a number of individuals and corporate clients outside Accra and has invested heavily in recording and broadcasting equipment to allow some events to be broadcasted over the internet. This facility is not available at all events conducted in WD's premises and is proven to be very popular. To date, no specific extra charge has been levied for this service, but the Chief Executive Officer, CEO of WD, has asked us to prepare a report for him advising on whether it would be practical to charge separately for it, and if so, the level at which the charge should be set. Point 2. Unfortunately, WD's main supplier of chairs went into liquidation during the year. The partners said that they were fortunate to be able to find an alternative supplier with whom they entered into a 3-year contract for the supply of chairs. At the time of signing the contract, WD considered the contract to be on very favorable terms. However, the supplier is based in Nigeria, and the contract was denominated in Naira. Movements in the exchange rate now make it look far less attractive, and the CEO has requested that we examine the contract to see if there is any way he can legally set it aside. Required. Critically evaluate any possible ethical issues arising from the client's request. Discuss whether the auditors may be liable to the bank in case the audit was negligently done. B. Should I go on?
Yes, please go on. Just read everything so that when we start saying.
Okay. B. You have been recently promoted as the ethics partner of famous chartered accountants, a licensed audit firm. At your first visit to the managing partner, he informs you of an appointment with Phobia Foods Limited, PFL, and gives you a file to go through. You open the file and find a copy of an email from the managing director of PFL. Extracts which read as follows. From Managing Director, Phobia Food Limited, to Managing Partner, Famous Chartered Accountants. Subject: Evaluation of Business Expansion Plan and Associated Items. Congratulations on your offer of appointment as auditor cum advisor of the company. As discussed in our earlier meeting, Phobia Food Limited would like to open 3 more outlets, 2 in Sunyani and 1 in Sukakupe. The necessary financing will be obtained through a new bank loan and the rescheduling of the payment of the existing loan, which is technically in default. Okay. Your appointment and fees. Your audit fee will be 16,000 Ghana cedis for the year ended 30th June 2018. Your fee for evaluation of our expansion plan and advisory service in relation to obtaining a bank loan will be 9,000 Ghana cedis. For advisory services and business efficiency and strategic decisions, your fee will be 3,400 Ghana cedis per month for the next 2 years. Shareholders and key management issues. 5 founding directors, each with equal shares, incorporated PFL, which commenced trading in 2009. I still maintain my original 20% holding. Audit and accounts, 2016 to 2018. Ofosu Mensah and Associate, a firm of licensed auditors, audited the accounts for the year ended 30th June 2016 to 30th June 2018 inclusive. The audit of PFL for the year ended 30th June 2018 was signed off on 19th November 2018 with an unqualified opinion. Notwithstanding qualified opinions had been published in the previous 2 years' accounts. The shareholders of PFL approved your firm's appointment at the annual general meeting held on 15th April 2019 for the year ended 30th June 2019. The fund raised by the new bank loan will be used for expansion of the business. Okay, can you scroll down?
Okay.
Your firm is also expected to advise the company on the application for the new bank loan and the rescheduling of payments of the existing loan in default. Yours sincerely, Managing Director. Required: evaluate 5 risk considerations and issues for famous chartered accountants that should be identified prior to accepting this engagement. 10 marks.
Okay, fantastic. So you see, the reason why I always emphasize the fact that you need to go through the past questions is that you see a pattern in the questions. There are certain things that they keep on asking. It's just that they just change how it is asked. I think in our previous past question that we looked at, we saw, I think, ethical considerations. We saw something similar. So that's why I always stress, go through the past questions. Go through the past questions. Right. So, so let's try to solve question 1. The long and short of question 1 is that we should critically evaluate any possible ethical issues that may arise from the client requests. So before I even jump in, what are some of the ethical issues as you go through, as Caleb was reading the passage, were you able to spot out any ethical issues? I think this is similar to, what I can't remember the year we solved the other time, but I think this is quite similar. Correct me if I'm wrong, but are there any ethical issues that you can see in this passage? Are there any ethical issues?
So can we say that despite the fact that they are providing more or less like an assurance engagement together with more or less like an non-assurance engagement, that is the giving advice to the CEO on the purchases of the new more or less advanced technology that they use in their events.
Okay, so providing audit as well as advisory services at the same time.
Yes, please.
Okay, but why do you think that would create, why do you think that's an ethical issue?
Well, you are going to advise them on whether they should charge them extra fees to their new services, and it may affect how they prepare the financial statement in the next or in the coming year, of which you will then audit. So it may become like more or less like a self-review.
Okay, that's a good one. That's a good one. Does anyone have any thoughts before I come in? Does anyone see any ethical issues before I come in? So this is 4 marks. So most likely you only need to give 4 points. Does anyone, what do you think? Where do you think there are ethical issues here?
So can you also look at the fact that they need more or less like a legal guidance, of which the firm may not have the staff the staff with the required skills to lead them, which may lead to more or less like a legal issue, because they want to legally set it aside. So as to whether they have the required skill to set that aside is also put into question.
Okay, so those are 2 good points. Let me add some few points to it. So first of all, when an auditor is providing any other services apart from the primary audit services to an audit client, it can create threats. And I always said that when you see ethical issues, when we are discussing this the other time, I always said that when you see ethical issues, always look at it in relation to the threats that may arise. So when you are providing any other services to another client, it can create threats, it can create threats. And some of these threats are what Caleb mentioned, which could be self-review. One of the key ones is self-review threat. So, because if you have given an advice to someone, the person implements the advice. And then since you are the auditor, it's likely that indirectly you review what you have advised on in the past. So it can create an ethical issue. It can create an ethical issue. So always look at these ethical issues in terms of the threats that they cause or create. I hope that's clear.
Yes, sir.
Okay. Another thing that we also need to look at is when you look at the case, you would realize that there's an issue with the fees. And I think Caleb mentioned that, So if you look, I don't know, let me see where that is. But if you reread the case, it tells us that another thing that may create an ethical issue is the level of dependence of the auditor on the fees from the client, right? And so that's where we talk about the 15% rule, which we discussed in class. So if an auditor is very, very dependent on the fees from the client, it can also oops, let me charge my, please give me a minute. It can also raise ethical issues because of the threats it creates. As I always said, always look at ethical issues in relation to the threats that they create. So once you know the threats, from self-interest to familiarity to all the known threats, you are able to capture the ethical issues very, very easily. Very, very easily. When you are very, very dependent on another client in terms of your recurring fee income, it's likely that your independence can even be impaired. And so that can go ahead to impair your objectivity and all that. So that's something that is necessary to look out for. That's something necessary to look out for. So let me ask, okay, I think I've already asked this. So those are a few things I'll add. There are a lot more when you go through the ethical issues. When you go through the threats, you'll be able to identify a lot more issues. Yeah. Then if you look at II, it says discuss whether the auditors may be liable to the bank in case the audit was negligently done. We've talked about this in class as well, right? Where we talk about negligence and all that. In case the audit was negligently done, can the auditor be held liable? We've discussed this in class. Today are my people asleep or Caleb is the only one talking. Abigail, Angela, Kingsley, Lorraine, Madeline, Mawina, Thomas. Okay, Caleb, go ahead.
Well, if the affected party can prove that that he or the organization was reliant on the financial, then the auditor can be held because it's a partnership, and we cannot hold the partnership as in the organization partnership liable. So it's basically the individuals. So
okay.
yes, that is that.
Okay, good point. So first of all, for questions like this, first of all, we need to know what negligence is, right? So negligence is essentially the fact that you haven't been able to exercise professional care, or what we call the duty of care and skill in your work, and this is for any professional. Professionals are expected to exercise due care and skill when they are doing their work. It's very, very important. Very, very important. And usually what you need to know also is the relationships here, right? You need to know that the auditor owes a duty to the client and no one else. The auditor owes a duty to the client or no one else. So after you've talked about negligence, in your own words, what negligence is, you need to establish the relationship. Who is the auditor, responsible in terms of his work? 2, the auditor was contracted by the audit client to perform an audit. That's very, very important to establish. So that's the second thing you do, right? There are 3 things that you need to look at when it comes to negligence, or 3 outcomes usually. Or let me say 2. You can say 2 or 3. First of all, after every assessment, it's possible that there will be no negligence. Like the person who is raising the negligence charge against the auditor doesn't know what they are talking about. So there is no negligence at all. And that 2, the second outcome is that the actual person who is bringing the case, the auditor doesn't owe them any explanation. So that's why I said establishing the relationship is very, very important. Establishing the relationship is very, very important. So in this case, who is the bank? In this case, who is the bank? How is the bank related to the auditor?
Can we say indirectly, he's more or less like he's also a party, but he's more or less like a client, because he's going to base his decision on the loan based on the outcome of the audit.
Okay, so you feel like the bank is like a client?
Yes, sir.
Okay, does anyone have any opposing view? Is the bank a client?
I think the bank is a third party.
Fantastic.
Third party.
Yeah, so yeah, so the bank is a third party. So you need, when you are defining the relationships, you have to define it properly. The auditor owes a duty of care directly because there are other people who depend on audit information. Those are third parties, but those people didn't contract the auditor. It is the client who contracted the auditor. It's the client who said, hey, in an engagement letter, they said, hey, these are your duties, these are our duties, perform this audit. It's very, very important. So for the bank to succeed in such a situation, for the bank to succeed, if the bank decides to bring a case at against the auditor, there are certain things that they must be able to prove. They must be able to prove that the auditors owe them a duty of care. That's very, very important. The auditors owe them a duty of care. So what both of you are saying, I'll explain it and bring it home so that you see what I'm saying. So the bank must say that, these auditors owe us a duty of care. They must be able to prove that. So in this case, is that what happened? So what does it mean? They must be able to establish that, there is a close relationship between them and the auditors. So in this case, is that what happened? That's what we need to find out. So here, what we check for is awareness. Was the auditor aware that the bank will rely on the audited financial statements? Is that what happened? Was the auditor aware that the bank will rely on the financial statements?
Yes, sir. It was stated.
So in this case, it's quite different. Even though Lorraine, that's what we are discussing now. I don't know if you can hear us. Can you hear us? Yeah, so even though